Cost volume profit questions are all about breaking even and then how much of a profit are we actually going to make. And so generally that's assessed on a unit basis and can also be looked at on an overall basis. So if we start off from the question and we want to look at the break-even point in units, and that's measured by the fixed costs divided by the contribution per unit. So in the question, the sales per unit price is €150. Variable costs are made up of manufacturing costs of 35.10, packaging of 450, and selling of 250. Subtracting these variable costs from the sales per unit will give us a contribution of 107.90. Dividing the contribution per unit into the €350,000 fixed cost gives a break-even point of 3,244 units. The next step in this question is to calculate what the projected profit is going to be. The projected sales in units is 15,000 and the sales price per unit is 150,000. Therefore, we end up with a total sales figure of €2,250,000. The variable cost that we calculated above total 42.10, so the variable cost total is €631,500. This gives a contribution of 1,618,500. The fixed cost given in the question 350,000, and therefore the profit in this particular case is €1,268,500. The margin of safety then represents the amount above the break-even point that we actually are selling, and so how much of an additional profit in either units or sales are we making. So if the projected sales are 15,000 units and the break-even point is 3,244 units, that means the margin of safety is 11,756 units. To work it out as a percentage, you divide the margin of sales in units by the sales in units and then obviously multiply by 100%. So the margin of safety is 78.37% in this question. The proposal to open on a Sunday will result in an increase in sales volume of 5%, but will also result in an increase in fixed costs of 7%. So the question is, what impact will that have on the profitability of the business, and therefore is it worth opening? So in this case, we can see that the sales volume by 5%, which will mean that we will sell an extra 750 units in this case. The change in the fixed cost then will result in an increase from 350,000, which is the initial projection, by 7%, resulting in a new fixed cost figure of €374,500. The next step is to prepare a revised profit statement based on the new sales projections, the corresponding new variable costs, and then the fixed costs. So the sales will increase to €2,362,500. Variable costs will increase to €663,075. We then have the fixed costs, which have gone up to €374,500, meaning we'll now make a profit of €1,324,925. The original profit was €1,268,500, and so opening on Sunday is going to result in an increase in business profits of approximately €56,000. So it is recommended that the business opens on a Sunday. The last step in the question is to create a CVP chart. And so the key figures we need to use are the fixed costs, which was €350,000, and the break-even point of €486,600, the break-even units of 3,244. Once we plot each of those on the graph and line them up, we can identify the areas in the chart where a profit and a loss will be made.